and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra and you're watching your stocks this Wednesday afternoon. Well, it's turning out to be a session where we are seeing some amount of profit booking continuing for the frontline indices. So we have the Nifty, which is down around 92 odd points, and we have the mid-cap index, which is managing to hold up with a gain of around half odd percent. So building in terms of gains, the advance decline ratio has been positive through the trading session and continues to be so. So around 2,300 stocks advancing with around 1,700 stocks declining on the Bombay Stock Exchange. Some news coming in on Adani Total Gas and Shigan have signed an MOU for collaboration in decarbonization. Remember, a lot of these Adani stocks have been on fire in today's trading session after the court verdict. And as you can see, Adani Total Gas now at the high point of the day, up around 8.5%. But we'll discuss all this and more in the next 30 odd minutes. Joining us today is Parthiv Shah, Director at Tracom Stock Brokers on the fundamentals, and Vaishali Parekh, Head of Tech Research at Prabhudas Lilladher, to answer all of your stock queries today. Thanks, Parthiv, as well as Vaishali, for joining in. Well, let's get, Vaishali, before we get talking about specific stocks, wanted your quick take on a couple of these Adani stocks, which have seen a good amount of upsurge in today's trading session on the back of fundamental news. But what are the technicals telling you? Would you be a buyer?
Good afternoon, all. And yes, talking about Adani, I think they have already got into a trend. The worst is over, according to me. So I would say it would be a buy at dips from here on. I'm looking at all these stocks. Let's start with Adani Port, Adani Enterprise. They have made a good base. So talking about Adani Port per se, 1,000 is a very good base and it's getting into a trend. So I would say, yes, my view is positive. And the view is the same for the other stocks, that is Adani Green or Adani Wilmar. They all look positive at this level.
Okay, all right. Well, let's any view, Parthiv, on the fundamentals when it comes to a couple of these Adani stocks? What would you recommend to your clients today on it?
See, there's no doubt they're building fantastic assets in the infra space and in the renewable space. We do like what they're doing, especially in Adani ports, because I think they've given a guidance that next year they will touch 400 million tons of cargo handling, which is a lot higher than what the street was penciling in prior to their guidance of around 360, 380. And that is one company where there is amazing visibility, because it's not easy for any other competition to come to this scale. And the way government is also intending to privatize a lot of other ports, I think that should bode well for both organic and inorganic growth strategy for Adani Port. We also like the incubation company, which is the Adani Enterprises, because this is the company which still houses the airport business, the data center business, the mining business, and a lot of the businesses which are coming up. This is also one company which can give fantastic returns to investors over the next 3 to 5 years.
Okay, let's get in a couple of queries from our viewers now. We have Mr. K.S. Rao, writes to us from Andhra Pradesh. He holds 300 shares of GMR Airports Infrastructure, which he's bought at around 50 odd rupees. He wants to know the future prospects for his particular investment. He's currently sitting on a profit, so he wants to know what to do with it. Parthiv, over to you on this one. What would you recommend on GMR Airport Infra? Do you think that it would be prudent to take some amount of profits, considering the stock is very close to its 52-week high?
See, the one thing to be noted is that GMR Airports is the second largest airport handling company in the country. And all the airports that this company manages, I think if you look at the footfalls, if you look at the trends in terms of how much of passenger movement is taking place through airlines, despite the fact that there was huge surge in terms of the airfares, despite that, we saw humongous travel. Now, going ahead, hopefully with the aviation turbine fuel coming down, again, if the airline tickets were to come lower, we are expecting this footfall to grow in double digits over the next 3 to 5 years. Other companies like GMR Airports have commented that they'll be upping their capacity because, at the current handling rate, they're already occupied. So in that case, our sense is that knowing the fact that infrastructure is a boom in our country and it is looking sustainable, especially in the airport segment, suggest a hold onto this stock despite the gentleman making very good profits. I think going ahead, this company can do extremely well.
Okay, any call on the technicals, Vaishali?
So talking about GMR, right? I would say, well, it is in a very strong trend. And now that I'm looking at the monthly chart and the weekly chart, I think it is, of course, having a very prominent support at 65 and the near-term support lies at 76. So even for a trading strategy, I would call it a good uptrend is in form. So I would be looking at a target of 100 from here on. So view is positive for GMR. Depending on your time period, I think one can hold this stock.
Okay, all right. So that's on GMR Airports Infra. Let's get another query now. We have Shailesh Singh, who is on the line from Ahmedabad. He has investments in LIC as well as Tata Motors. Hi, Shailesh. Happy New Year. Go ahead.
Happy New Year and good afternoon to everyone. My question is regarding LIC and Tata Motors. I have about 90 shares of LIC at an average price of 900 and Tata Motors around 200 shares at an average price of 455. I'm a medium to long-term investor. While it is good, I'm seeing good profits in Tata Motors and LIC is close to my buying price. I was just wondering if I can see better returns in the coming months or 3 to 4 quarters, I am willing to stay back, or else maybe it would be time for me to cash out. So I just wanted the experts' advice on these two scripts.
Okay, all right, fair enough. A straightforward question there. Parthiv, let's start with you. Tata Motors, good profits, LIC near the buy price. What would you recommend for both of these stocks on a fundamental basis? Shailesh is willing to hold for the next few quarters.
Firstly on LIC, there's been a respite for the company in terms of government giving them more time for the stake sale as per the SEBI norms of 75%, because otherwise I think there was always this huge overhang and fear about huge supply of paper coming onto the market, which has I think now been avoided. Now coming to the fundamentals, I think out of all the listed life insurance companies, public or private, I think this is one company which is, despite its size and scale, it's extremely undervalued. If you look in India, the life insurance segment is out to grow because the protection gap is at around 85%. And this company, after the recent run-up, is still quoted at just 1.5 times price to embedded value. And going ahead, I think management has shown confidence that they are trying to improve the value of new business margins. And as and when that uptake takes place, we are very confident that this will get re-rated. So I would surely suggest a hold on LIC at this juncture. Talking about Tata Motors, the gentleman is sitting on extremely healthy profits. We know that there's some sort of cyclicality in the JLR business, which is globally connected business, especially in places like China, US, Europe. And looking at the weakness coming from China, our sense is that it would not be a bad idea to book some profits in this company. No doubt, I think all its verticals are firing on all cylinders, whether it's the CV segment, the domestic passenger vehicle segment, the GLR segment, all are doing extremely well. And as a result of it, the stock is almost at its all-time high. But no harm taking some profits out here.
Okay, and Vaishali on the technicals?
So I would say, well, Tata Motors, I would agree with Parthiv that we have seen a one-way rally. So partial profit booking cannot be ruled out. But, well, I would also say that a disciplined trading, keep a stop loss of 760. And if the momentum and the market continues to stay the way it is, then, well, in all likelihood, this can go towards 800, 820 levels. So I would say partial profit booking should not be ruled out, and also keep a trading stop loss.
Okay, all right, fair enough. So that's on LIC as well as Tata Motors. Let's get in another question now. We have Tina who writes to us from Pune. She holds 500 shares of JSW Infra at 149. So she's sitting on a profit on that one. She wants to know what to do, whether to book her profits or to remain invested. Sitting on a profit on this particular stock as well. Vaishali, let's start with you. What would you recommend on JSW Infra, the holding?
So I would say, well, the stock is in a trending mode and it is in the formation of higher bottom. So technically, purely on technical terms, I would say keep a stop loss of 205. Below 205, it would negate the view. Maybe we may see further correction. But if 205 level is respected and we see some volume coming in, I think this is ready for a target of 220, 230 to start with. So my view would be positive for now. And we can have a relook once the stock goes above 240.
Okay, all right. Parthiv, quickly, your view?
Yeah, I do agree with Vaishali that, even in investment is important to keep a stop loss, and one can keep at 205 out here. The reason being that JSW Infrastructure, when it came out with an IPO, is quoted at around 13 times EV EBITDA multiple. Currently is quoted at 22 times. So there has been a massive re-rating that has already taken place. They've increased their debt because of certain added acquisitions, and they have more dependency on the commodity related business. So even if the gentleman is comfortable, we can ask him to exit his position here and switch into something like Adani Port, which is a lot bigger scale and which is the number one by far in terms of the cargo handling capacity.
Okay, all right. So that's on GSW Infra. We need to take a short break. Parthiv as well as Vaishali, hold on. We have a lot more queries on the other side. Stay tuned. Welcome back. Well, we still have with us Parthiv Shah on the fundamentals and Vaishali Parekh to answer all of your stock queries. Well, before we get to that, just a quick update on the markets. The Bank Nifty is completely flattened out. It's just about 12 points lower at this point in time. We have the mid-cap index, which is holding up with a gain of around 0.5% and an advanced decline ratio, which is in positive terrain. A couple of stocks which are buzzing from the broader markets. Do watch out for Ircon, Bandhan Bank, PC Jewelers, Adani stocks like we've been pointing out, but even something like Marksins Pharma is doing well in today's trading session, and a couple of smaller ones such as Sagar Cements is showing traction on the upside, up around 3% Lots happening within the broader markets in terms of specific stocks. But nonetheless, let's get in another query now. We have Vivek who writes to us from New Delhi. He holds 1,000 shares of IRCTC, which he's bought at around 610 rupees, and 300 shares of Hind Copper, which he's bought at around 116 odd rupees. He wants to know the future prospects of both these stocks. He's making money on both of them as of now. So Vaishali, what would you recommend to him? Should he probably hold on based on the technicals?
So based on technicals, I would say IRCTC still has a very strong uptrend. And as we can see, rail stocks are really booming. So I would say keep a stop loss of 880 since it's already on a good profit. So I would say that, yes, keep a stop loss of 840 and start booking profit from 940, 950 levels, because that would be the ideal way to go about it. And the other stock are you asking me about is?
Hind Copper.
So Hind Copper, yes, we have seen a very good run up, but seeing the stock, I would say if it's a longer term period, then keep buying at every decline, because now that I'm seeing the weekly and the monthly charts, I'm looking at a price projection coming towards 480, 500 levels. So if it's for a short-term duration, then he should book profit. Else, just keep buying for a longer-term perspective at every dip.
Okay, all right. And Parthiv, your recommendation on both these stocks, IRCTC from the railway space and Hind Copper?
We do expect IRCTC to perform extremely well in the e-ticketing side of the business, where they also own the convenience fee. The reason being that, talking about the airfares, which are extremely high, we saw huge utilization in the railway trains. And more importantly, they are like the market leaders, and there's no competition in that segment of the business. So we are expecting them to post decent set of results in the next 2 quarters. So certainly hold on to it. Talking about Hind Copper, I think there's been a stupendous run in this company, and that is the case we have seen in a lot of public sector enterprises where the free float is less. So our sense is that there is no harm booking some profit. At least remove your original invested capital and you can stay put with the rest of it.
Okay, all right. Let's get in another question now. We have Nidhi Agarwal who writes to us from Mumbai. She holds 20 shares of NTPC, which she's bought at around 100 odd rupees. So she's in the money on that one. She says she's a short-term investor, asks if she can book her money, her profits, or wait to make larger gains. Well, NTPC has actually been chosen by a couple of brokerages as long-term plays, the great, a great way to play the growth that we can probably see in the Indian power space. So from that context, Parthiv, what would you recommend, say from a longer term perspective? Do you think that one should take profits off the table when it comes to NTPC, or maybe hold on for larger gains?
See, what we most like about NTPC is their foray and the huge capex that are already done. A lot of capital is work in progress, and plus new capacities that are going to come up in the renewable energy space for NTPC. And the management has been very vocal with the fact that they would like to kind of unlock shareholder value by separately carving out the IPO for the renewable energy business. We have seen with likes of VIDA what sort of value was unlocked whenever the word renewable is used. So NTPC has that in its SOTP valuations. Plus, I think the core business, which is the power generation to the thermal plants, the plant load factor and the plant availability factor are quite high. So they should generate stupendous cash flows, and as a result of it, the dividend yield should also go up.
Okay, on Vaishali, your take on this? It's rallied all the way from 162, which was its 52-week low, to over 300.
I would say no harm booking partial profit because market does go in whipsaws. We are at a vulnerable level. So any news or any profit booking coming in, we may see some profit booking coming in these stocks also because these are the most run-up stocks. So I would say book partial profit. You will get a chance to again re-enter at lower levels.
Okay, all right. That's the word coming in on the technicals for NTPC. Let's get in another query then. Rakesh writes to us from Kerala with an investment question. He wants to invest in banking stocks and asks out of which private or state-run bank will be best suitable for him. So this is a larger, more broad-based question when it comes to banks. Technically, what does it look like for you, Vaishali?
So technically, I would say, well, I would be stock specific. In the PSU sector, most of it is running and doing very well. So it's time for SBI. It's about time that it participates. So SBI would be technically a favored pick as far as the PSU counter is concerned. And as far as the frontline, well, Axis still holding its fort very well. The uptrend is intact because if the momentum once again picks up with a support of 1060, I think Axis is ready for a target of 1180 to 1200 levels to start with. So Axis, ICICI, they all look good to me from here on.
Okay, all right. And fundamentally, what would you recommend, Parthiv, on the banks? Which one do you think would be, which one do you think would be a good buy?
Even I like the frontline private sector banks, especially likes of ICICI Bank, HDFC Bank. We are expecting very good numbers from these banks, not only in Q3 but also Q4. And they're disbursing loans at a rate which is a lot higher than the industry average. It goes to show that they're garnering a lot more market share as compared to some of their smaller peers. And our sense is that the balance sheets are in pristine condition, and more importantly, they'll be able to maintain reasonably good spreads because the CASAs have been very stable. So we are expecting even slight improvement in the credit cost. So these are the two frontline banks which we feel investors can buy here and stay put for a long term.
All right, that's on the banking space. Do watch out for a couple of these metal stocks, however, which are under pressure in today's trading session. So that seems to be one of the pockets which is not doing well today. We have JSW Steel, Hindalco, all of these stocks which are under pressure. Hero Moto from the auto space is down around 2.6%. LTI Mindtree from the frontline IT space is giving company to Infosys. Both those stocks down 2.5%. Remember, Infosys TCS will be releasing numbers on the same day on the 11th of Jan. Well, Rashmi Sharma writes to us from New Delhi. She holds 20 shares of M&M Financial Services, which she's bought at around 100 odd rupees. She's a long-term investor, wants to know what to do, whether to remain invested or book her profits, as well as, she's asking about the future of this particular stock. M&M Financial is the one we're talking about. Rashmi sitting on a profit right now. So what would you recommend on this one, Parthiv?
See, we are tempted to suggest some profit booking because we know for the fact that M&M Financial has a lot of dependency on the rural side of the lending business. And rural economy has been very tepid and quite volatile. And still, I think the green shoots are there, but still, I think it's not as robust as it used to be before. So instead of waiting, I think the stock has already run up with the recoveries that the management has posted. But our sense is that it's not a bad idea to book some gains out here.
Okay, all right, Parthiv as well as Vaishali, thanks very much for joining in and taking us through all of those questions. That's all the time that we have on the show, but do remember to email us your queries and we'll address them with our experts. Stay tuned. Closing bell up next.